Hey everyone, welcome back to Underdog Investing. So SPACs have been booming lately, but check this out. SoftBank-backed Grab agrees to deal to go public in world's largest SPAC merger. That's exactly what I'm going to talk about today. And then at the end, I'm going to talk about the stock price and what I'm planning to do with this SPAC. So let's jump straight into it. What is Grab? So Grab's the #1 consumer platform in Southeast Asia. It has over 190 million mobile downloads and users as we speak today. It's the #1 transportation platform, the #1 fintech platform, and the fastest growing regional food delivery service. It also operates in the hotel bookings sector as well as the insurance business. And this is in Southeast Asia. It is known as the Super App. It kind of is like the Uber of Southeast Asia. And if we have a look here, it operates in actually over 350 cities in 8 countries as we speak today. And this is basically the Southeast Asia region. And if you have a look at the bottom, Indonesia is the largest in terms of size, and it's also the largest in terms of market size for Grab. So let's talk a bit about the SPAC deal now. So Grab announced on Tuesday that it's set to go public through SPAC merger with Altimeter Growth Corp in a deal that values the company at $39.6 billion. So it's very interesting and exciting the fact that the largest SPAC deal is going to be a Southeast Asian company. And check this out. So once the merger is complete, the ticker symbol is going to change from the Altimeter Growth Corp to actually Grab. And what's really interesting, it might sound trivial that I'm mentioning this, but research has actually shown that the more catchy and the more memorable the ticker symbol is, the better the stock will perform regardless of the performance of the company. So it's actually quite important. And I think Grab is a great ticker symbol for this company. So again, Grab will receive about $4.5 billion in cash, which includes $4 billion in PIPE. So that stands for Private Investment in Public Equity. And that's basically where you got investment firms like BlackRock, Fidelity, Morgan Stanley. They're the ones who are financing this whole SPAC deal. So now I'm going to talk a bit about some of the good points about Grab and some of the reasons why I'm bullish on this company. The first one is the competition with Uber. It actually managed to outcompete Uber. And if you check this out, so after a period of intense and expensive competition by Uber to dominate ride sharing in many markets, it sold its Southeast Asia business to Grab 3 years ago in return for a stake in the company. So that's a bit like Uber surrendering to Grab in the Southeast Asian region and actually saying, here, look, take our business, we'll take some of your company. And that's just a very bullish sign for Grab. The fact that even a company like Uber cannot outcompete Grab in Southeast Asia. And it sounds like something that was a win-win for both of the companies. But anyway, that's very bullish for Grab. The other thing is that's very good about this company is where it's located, the region. Southeast Asia is actually booming. It saw a surge in the use of digital services like e-commerce, food delivery and online payments. And what's interesting is as many as 40 million people in 6 countries across the region came online for the first time in 2020. So you can see that there's a massive transition in Southeast Asia into the e-commerce sector. And that's exactly what will make Grab thrive. And then it's just reflected in the revenue. So Grab's net revenue had grown 70% year over year, recovering to pre-pandemic levels with its ride-hailing business. So as we know, the pandemic isn't completely over yet, but the fact that Grab's already managed to recover to pre-pandemic levels in terms of ride-hailing just shows how sustainable and how resilient this company is to stresses and crises. It's only a good sign for the company. So this is the CEO, Anthony Tan. Let's see what he has to say. So there's no one country that makes up more than 35% of our total revenues. And this is actually really good as well, because this means that it's very diversified. So having that resilience and regional diversification has really helped us. It makes the company a lot safer for investors like us, because if you imagine, we're not just investing in one country or one sector, we're investing in the whole of Southeast Asia. And we're not just investing in ride hailing, we're also investing in the hotel bookings business, in insurance, in the food delivery service, in the fintech service. So it's almost like if we invest in Grab, we're diversifying into Southeast Asia. So that makes it a lot less risky to invest in a company like this. And it's also good to diversify. So this is my one worry about the company. So it's not actually specific to Grab, but it's more about SPACs. So the first quarter this year, capital raised by blank check firms, so SPACs like Altimeter, has already outpaced 2020's total issuance. And more than 100 companies have gone through SPACs in March alone, according to SPAC research. So I'm just a bit worried about the whole SPAC boom. The last thing I want is to invest in these companies at all-time highs, and then for it to end up like the dot-com bubble in 2000, and then we become bag holders. So that leads me to the stock price of $12.52. Now obviously if the SPAC deal doesn't go ahead, we get our $10 back per share, so in that sense it's less risky. If we have a look at the 5-day chart, you can see that since the announcement of the merger, the stock price has actually gone down by 20%. And I think that's likely to be a case of buy the rumor and sell the news. Looking at the 6-month chart, you can see we've been very volatile, but if anything, $12.50 is a fairly decent time, personally, I think, to purchase some of this stock. And the reason for that is because if you look at their lows, it's around $11.30, $10.90. So I'm not saying I'm going to buy, chuck in a load of money into it, but personally I think this is a good time for me to get a small position in this company, if I was going to. But this is what my plan is. So first of all, I think that SPACs are extremely high risk, but that comes with the potential of high rewards. So I think that there's potential to have exponential returns in SPACs, and that's why I'm going to have some SPAC in my portfolio, but it's just that it has to be a small amount, because personally I don't want a portfolio which is extremely volatile, because although SPACs can go really high, they can also go really low. So for me, I feel comfortable having SPACs being less than 10%, so max 10% of my portfolio, and that's all the SPACs in total. I wouldn't put more than 1 to 2% of my portfolio into one SPAC. So yeah, so that's my plan. I'm probably going to do a bit more research into the company before I put any money in. But yeah, that concludes the video. If you found it helpful in any way, I'll be so grateful if you can smash that like button and subscribe to the channel for future updates. Even consider sharing this with your friends. And I'd love to hear your thoughts in the comment section down below. Are you planning to buy any of this SPAC, or do you own any already? Are you planning to sell it? But yeah, thank you so much for watching, and I'll see you in the next one.